So this is the S&P 500 chart. And the last few days, I've mentioned to you that for me, this scenario, one of the scenarios that I think would be quite healthy for the markets would be a drop of around 5 to 6%. So that would take us all the way down to 6.4K. And that could be a nice rebuilding zone for the S&P 500 and the broader market. And it kind of makes sense because we've had this very, very nice run up from April, the bounce on in April, all the way up to early October. Now, that's not to say that we can't move higher from here, but I think as you guys can see on this chart, there is a bit of resistance on this lower trend line or part of the band. There's this lower level here which is resisting. I've mentioned it before. I think it could be similar to this move that happened around April of 2024, where we end up going from a channel being based here to then being based on the lower end. And then there was a channel again being built. Okay. So that we could have now a channel being built like this. Okay. That's something to monitor. We are also at all-time highs. We've also hit one of my overextension zones that I identified late last year, early this year, as a key level that I see the markets going into the new year, meaning 2025, which I think the year now is about to end. And the second overextension zone, mid 2026 for me, was 7.2K. So are we going to get a dip and then build up to that level? Or are we going to keep on grinding up to that level? We have earnings. We've had fairly bad earnings with some companies like Netflix and Tesla. So we have to be a bit cautious. But overall, I think analysts are seeing this as a good earnings season and they're expecting good earnings. Whether they meet expectations of investors and forecasters, we have to see. At the moment, we're seeing some sell-offs. I think we saw a sell-off in Tesla as well, if I'm not mistaken. I checked it briefly last night here in the UK and there was some selling off. Let's have a look. Right, yeah, we had that sell-off. So I end up selling Tesla around this 440 level. Yeah, 440 level for a tiny, tiny profit. Almost break even here. Just to protect myself, we ended up selling a big chunk of our portfolio just because they were continuing to drop, especially this AI. We even sold like AMD, Intel, etc. I just don't want to hold anything when there's volatility. I'm happy to rebuy and re-enter when the time is right. There were some that I held. I think I ended up selling Nvidia as well. Yeah, I ended up selling Nvidia as well, I remember. And we're currently waiting here for the market to finish this volatile month. October, it tends to be a volatile month. I have to say that. And one of the things that I want to point out here is I shared some macro analysis in my Discord group. It's probably worth sharing here as well. I just want to show some stats. When September is a positive, when September month, we tend to see bad returns in October, or we see very, very low returns. Predominantly, we see selling off. Okay, 40% chance of a positive October. However, we tend to see 100% of the times when September is positive, a good quarter, fourth quarter. Okay, so what it means is my thesis that I've been mentioning for a number of weeks now, maybe even months, that we have a red October because of the volatility, and we have a green November leading into a good December still stands, and I think the probabilities are in our favor for that to happen. Okay, this is very important here that we stay focused. We don't let the market and the news impact our decision making, and we continue to make good picks in the stock market, especially. Okay, that's something I wanted to point out.